Can everyone see my screen? Yeah, where it says February webinar.
Yeah.
Yes.
Nice.
Mine says March webinar.
All righty, let's kick it off. Welcome to the March webinar of Cryptio. No, it's the February webinar. And yeah, this is our third accounting partner webinar. So first of all, really great to see you all again. There's going to be some announcements at the end about the Telegram group again. So, stay tuned for that. But yeah, great to see you all here. The point of this webinar is to do two things. The first is to show you what's new in Cryptio and how you can use it. And the second is sort of industry news and developments that are, going to impact accounting, reporting, and our profession. So that's what we're going to go through today, a bit about the agenda. So let's dive in. Okay, product updates. If anyone has logged into Cryptio in the last week or 2 weeks, you must have noticed that it looks very different. We've got a new UI and a new navigation bar, and we're going to show you that and dive into that. But it's all the functionalities there. It's just moved to the side to make it more accessible. And then we've got a new NFT module. This is something that is in beta and some of you might have access to, but we're going to be releasing this over the next week or 2 weeks to all our customers. So we want to give you a sneak peek to that. And then finally, the impairment module. This again, maybe some of you are using it in the beta version, but we're also going to be releasing this in the next week, 2 weeks, and you'll have full access. And this has been obviously, the bane of existence for a lot of accounting professionals, but we finally got to a stage where we've got a very, very robust impairment module, and we'll walk you through that. And that will be Tremaine's domain. And then after that, we'll dive into Jeff's industry updates. You've got the FASB fair valuation updates from last time and the development since then. For our partners joining from Europe, the MiCA EU regulation. But it's also really interesting because I was just at the DeFi retreat in Portugal, and a lot of the US regulators are looking at MiCA very intently and seeing how that plays out. And it could be used as a model to see how things develop in the US as well. And then we'll go into the SEC staking rewards fine that Kraken faced, and then some upcoming events where you'll see some Cryptio representatives, smiling faces. So if you're going to those events, hit us up and we'll meet you there. And then we've got some announcements on the partnership side, and some Q&A and some more community updates. So that's the whole agenda. I'm going to pass it over to Tremaine. And I guess, yeah, I'll pass it over to Tremaine. So over to you, Tremaine.
Thank you, Hemant. Hey, everybody. Good to see everyone that was here last time, and welcome to anyone if this is your first webinar. So my side is going to be pretty much walking through more of the product updates, as Hemant mentioned, which is going to cover new UI, NFT, and impairment as well. Before we get into it, just a friendly reminder, as always, most of the things that we will talk about that's related to the product is available in our support center at support.cryptio.co. So if at any point, there's something that I might have brought up today or in the past, or you're wondering where can I access this without needing to reach out to us, I would say this is your best place to start. So to jump in. So as Hemant mentioned, we have a totally new UI, which is, as you can see, just geared towards making things a little more accessible. A lot of the dashboard related, like navigation bar, is on the left side now, and we retain most of the screen space itself to show actual data that's useful to you. So here you can see, you can still see your dashboard. Right below that, you can see your DeFi overview as well. The whole point of our switch here is just to make sure that all the data that we provide to you as soon as you enter the product is one, both the things that you find most useful, but also just making sure that it's easily accessible without needing to go through it. On the NFT module side, so I'm actually going to do a little bit of a live walkthrough in a bit, but this is a sneak peek into what it actually looks like. You'll be able to see everything from all the NFTs that you own, market valuation, last price changes, things like that. So I'll definitely be showing a little bit more of that because I find this pretty cool myself.
Yeah, Corey, we're going to show some pretty cool NFTs. So some of you may know that we do the back office for Recur, and so we're doing the back office for all of Paramount's NFTs, Nickelodeon, Tiffany's. So we'll be showing some cool stuff in a second.
Cool. So just to kick it off, so impairment is going to be the major topic from the product side, and I'm going to talk a little bit about it from a regulation and a guidance standpoint, and then from how we approach these challenges and how we built it. So general, just like very high level important topics with impairment is around the timing of it, the valuation, and then the reporting requirements. So on the timing side, one of the things that we had to consider is currently regulation only really has two requirements here, and it's at minimum, impairment should be done once a year, or it should be done whenever there's a significant event that could impair prices. Very vague, that especially on that significant event side of things, does that mean when the market crash? Does that mean when there's a hack? There's a lot of nuance there, and that's something that we wanted to consider as well in terms of the flexibility that we give into how our impairment module works. The next thing is valuation, which this is a major one because depending on where you are in the world, impairment rules are very different. The way we've built impairment module on our side is under the GAAP standard, which is once you impair prices down, the prices stay down up until the point of actual disposal. So what that means is if you are, well, we are actually in a bear market right now, and all of these prices that are coming down at some point, hopefully, these prices will go back up. And under GAAP, we won't actually be able to revalue these up at that time. Now, there's a little bit of nuance here because this might not even be relevant by the time we enter another bull market, which hopefully that's the case. But in the meantime, these are the current rules that we have to follow. And then finally, it's around the reporting on assets that have been impaired. So the FASB released guidance that asset roll forwards have to be an essential part of the accounting workflow for how companies report. And what that means is any impaired asset prices need to also flow through into these reports. So these are sort of the high level things that we had to make sure that we covered in the way that we built the module. Now, talking about the challenges a little bit. So as I mentioned with the timing side of things, there's a lot of ways that you can think about it. And what we wanted to make sure here is that we gave as much flexibility as possible, depending on what works for you. What we've seen sort of like as a best practice is, although guidance says minimum once a year, we find that what we've seen work on an operational level is incorporating this into your actual reconciliation process. So that means if you do a month-end close, or if you, let's say, report quarterly, semi-annually, whatever your actual reporting workflow is, we find that it makes a lot of sense here to build some sort of impairment testing as a part of that as you report period after period. So thinking about the module itself, we give flexibility to select any date you want in any period you want, as well as multiple dates within the same period. So if, for example, let's say you typically want to do your reporting at month end only, but then additionally there was some significant event that means you had to impair again within the same period, you can actually do that there. And what that means, you just have two sets of impairment testing done. And that's essentially how the module gives the option for you to do it monthly, per event, quarterly, whatever the case is. On the cost basis side of things, the challenge here is making sure that once you do actually impair all of your prices, gains and losses now have to track against these new impaired cost basis, not against your acquisition cost basis or anything like that. This is also the way how it currently works, and this flows through all the major reports as well. So you'll see once you download, let's say, your transaction history report, all of your gains and losses that you'll see on this report is going to track against your impaired cost basis for all of your asset prices following that first impairment or following that last impairment, actually. That ties in basically to reporting, which is same thing. We want to make sure that all of the reports that you use in the core accounting workflow, so think asset roll forward, any balance checks, your transaction history with your gains and losses, all of that needs to be able to incorporate the data from our impairment module. At the moment, this is only available to enterprise plan only, and for anyone who is on an enterprise plan that doesn't currently have access, please just shoot us an email or reach out to us and we can get you access to that to help out with the beta test. So here, actually, Herman, if you don't mind, I'm gonna take over from you.
Yeah, go for it. I'm gonna stop sharing.
Right. Can everybody see my screen?
Yep.
Okay, awesome. So before I jump into impairment, I know I mentioned I wanted to show off a little bit of the UI stuff. So here you can see the NFT module that we have. So this is all in the UI without you needing to download any reports. And basically you can see a list of all of the NFTs that you own in your workspace currently. You can see what's the valuation method that you chose. So we have a couple of options here. What's the market value and any unrealized gains associated with it. You can also click into them and you can get a live view of the NFT that you own just to make it feel a little more real. And again, on the right side here, you have all of your details related to it. So what's the name here? You could see this is NFTIF by Tiffany & Co. You can see your market valuation. Here you can actually select the different valuation methods such as last price, floor price, or if there's a custom one for you. So again, very geared towards just giving flexibility in the presentation. The next thing that I don't think we've showed up yet is our DeFi module. So again, this is also in beta, but all in the same navigation bar on the left side. You can see your positions that you currently have, what's the different types of positions, things like that. Before I get into the impairment, I do want to flag something that's come up a lot lately with unidentified addresses, and just in terms of best practices around investigating, okay, what addresses have we not flagged yet, whether it's internal, whether it's an internal transfer contact, or if it's a particular label from a vendor or something like that. Here, you can easily access and see a list of all addresses that you have transaction history with that haven't been identified yet. So without you needing to go through your actual transaction history itself or go through the needs review module, you can come directly to here. You can see how many associated transactions or movements do you have with a particular address. And then from here, you can dig into each one of the movements, and then you can flag this to say, okay, these movements are all related to vendor payments or customer payment here, whatever works in this case.
So just to highlight this, the only reason we're showing this has been in Cryptio since day one, but a lot of people didn't know they existed. But once you've done your import and you have your transactions, the next thing is identifying contacts, identifying the addresses, the counterparties. And this just gives you, in descending order, the number of movements and the addresses. You can also generate a report. So if you've got a client and then you're just waiting on the contacts, you can generate a report and send it to them being like, guys, can you just give me the names of who these counterparties are? So you can then import them in bulk as well, which you can do in the contact section in the same business toggle. So yeah, just a little bit of a reminder that this exists and please use it.
Cool, thanks a lot. So now to just show off the actual impairment module a little bit. So the way how you access it again is on the new left side navigation bar. You come down to accounting, and then there's going to be a new section here called impairment. And the way this works is we allow you to select any date that you want, and depending on the principal market for your workspace, whether it's CoinGecko or Coinbase, will fetch the price of the assets that you hold on that date and compare that to the actual cost basis of each of these assets in the workspace. So what that would look like is you'd come here, you would say select September 30th. And once you do, it'll generate a new line for that impairment date. You would apply the valuation and update the cost basis, which is right here. And you can see here, it shows you all the impairments that you've run to date. It shows you as well what's the total value of all of these impairment at the time they ran. So you can see it's scaling upwards with each new impairment. And it also shows on the right side the current value of the assets that you still hold that have been impaired, because you might have a situation where, say, your total impairments to date was 10 million, but you've sold a couple of those assets that were previously impaired. That wouldn't be factored into the current value of the impairments on your current assets. So we've given a view into both of these, both total impairments to date, as well as total impairments for current assets. Once you generate these and you apply the cost basis, this will flow all the way through to your regular reporting section. So let's say you want to run your asset roll forwards or your transaction history report, or if you run our new impairment balance report, which you can find here. So move my zoom. Okay, here we go. So we have this new report called Impairment Balance. This you can download, and it's going to give you the exact details of what assets were impaired. You can select which impairment you'd like to see. And once you download this, it's going to look a little bit like this right here. So it's going to show you a list of all of your sources, all of the assets held within each source, how many units were impaired, what's the value of this impairment, and it'll also show you what was the total value of your previous impairments on that particular asset in that source, and now what is your new total impairment value. So this is what we foresee as sort of a part of your reporting process. Is you would need to book impairment losses. This is what you would use here to book your overall entry, and you can see it broken out by different asset type, sources, things like that. Okay, cool. I think that is it for my demo. So Hema, I'm going to throw this back to you so you can share screen again. And then do a little bit of Q&A if anybody has any questions at all about UI, NFTs, impairment, the module, the reports. I know we covered a lot in the last 10 or so minutes, so definitely want to keep the floor open here.
I know Corey had a question in the chat, Tremaine. Situnde responded, show the NFTs, the simple trades, bundle trades, mint and transfer. But the mid passes, I guess we'll have to get back to you with more on that.
Got it.
So can I just elaborate on that a little bit and
Yes, please.
what
Yeah.
I've seen and what I'm looking for? So basically what has happened with this client is he purchases a bunch of mint passes for in the future to potentially buy an NFT. So what needs to happen is when you buy the mint passes for whatever you buy them for, somehow later when that mint pass gets used to purchase the NFT, you'll need to transfer the price from the mint pass to the NFT later, which will look like kind of a trade. So like if you were to purchase it with ETH or whatever, and that works out to be kind of a trade deal, it would be the same thing with the mint pass going forward.
Yeah, that seems pretty simple to me, because the mint
Yeah.
pass will have the mint pass, I'm guessing, is also an NFT. Is that right? It's not going to be a token. It's not going to be an ERC20 token. It's going to be an NFT.
Yeah, I believe, yes, it is.
And then they've got a smart contract that enables the swap between one NFT and another NFT, which is the final NFT. So the first NFT, suppose it was bought for 1.3 ETH. So then you can use the methodology of last price, which is 1.3 ETH. And then when you swap the first NFT for the second NFT, you can then apply the same price. You know, in this case, you just click on price and say last price 1.3 ETH, and that's it.
And then another caveat to that might be if multiple mint passes are purchased with whatever ETH amount that is, it's not always an averaging cost for each mint pass. We would need to potentially adjust the amount for each mint pass.
Yeah, I mean, the pricing is, you can always click on a transaction and change the price if it's needed for special cases. So yeah, I think you're covered on that one.
Okay, cool. Thanks.
Cool. Any other questions? NFTs, impairments, new UI? Okay.
Cool. Well,
Cool.
I guess we'll pass it over to Jeff now for.
Hey, everyone. Yeah, I'm going to cover some more stuff in the markets. I know we talked about FASB last time. I think it's pretty rare to see them move this fast, so I think they're feeling the pressure. But just going to go through that a little bit. You might have read high-level summaries, but just give you some insight into what happened there. So what they do is they have a board handout which goes through different proposals, and then the board has their decisions. They vote yes or no, and a lot of times they'll go into like reasons why they think they're voting yes or reasons why they're voting no, just to give some insight into like what their thinking is. They need consensus to move forward with stuff. So if it's not an even split, it just doesn't move forward. So the first thing they talked about was scope, like what's going to be included, what's excluded. One thing that was a little 50-50 on the decision was wrap tokens. In the end, they decided to exclude wrap tokens, considering them like a token of a token of a token. So it's like, where do you end? So they've recommended to exclude that from everything, but that doesn't mean that companies shouldn't apply like fair value, for example, to wrap tokens. I think, in my opinion, it just means that they don't want to be on the hook if something goes wrong with wrap tokens, since they're not technically, the real asset or underlying asset. So, I mean, the guidance was still follow this, but we're just not going to explicitly include this. Next is they're also going to exclude crypto assets created or issued by the reporting entity. So that's directly on like the FTX, FTTs, and all these tokens that, could be easily manipulated in value. They don't want any part of that and having that in the language of what they're going to publish. And then the next one was just that the blockchain or ledger needs to be public. It can't be a private ledger. So they're just commenting on anything that's on the public ledger. So the first thing or the most important thing they talked about was the fair value. One being early adoption and two being the transition method. I think previously they've agreed upon doing fair value. Now it's how do we get there and when do we do it? This was the fastest voting I've seen without any explanations of just a yes and a yes. Yes, we want early adoption. And yes, we agree with the transition methods. Now, one thing which I was a little unclear about, which we're hoping to get more clarity on, was exactly what fair value transition is acceptable. The ones you see on the screen here, the gains or loss to net income during the period of adoption, restating financials back to the earliest period presented with disclosures, or cumulative effect to the retained earnings at the beginning of the first annual period. Those were all on the handout. So those were all discussed. But like I said, they didn't go into much detail. It was just yes and yes. They agree on the transition. They agree on early adoption. What they highlighted in the actual board decisions was the last one, the cumulative effect to retained earnings. So I want to get more clarity on exactly what the transition method is, if it's just one, or if they've agreed on any transition method that the company deems best, in their interest. In my personal opinion, I think the first one would be the easiest, just transitioning everything to gain loss in that given period. But I mean, every company has their own reasons to make their own decisions. Other things that were discussed were usually non-public entities or companies. They're like any decisions that are made, they have another year to adopt these into what they're doing, because a lot of times these companies are smaller. They don't have the workforce. They don't have the capital to hire people to make sure that, whatever needs to be done can get done, and they have the headcount to do it. But instead of deferring non-public entities, they're going to also include these because I think they see how important this is for all companies. I think this is the number one thing people have screamed about: impairment, how it makes everything difficult. You're going to still need to do impairment. You're going to still need to do it for 2023. We'd also recommend doing it every single month going into 2022 for sure. But, every single month going into 2023, it's probably best to still do the monthly impairment. But we'll get more. So what they ended on is that they have a 75-day grace period. That leaves us into about mid-April, where they're going to come out with the formal letter for votes. And at that point, that's when the FASB asked us to give feedback on what the proposal is, the formal written proposal. So I'll be reaching out to all you, sitting down, talking about it, and getting a formal letter back to them. Okay, so that was FASB. I didn't want to talk about it too much, but just given it was so fast the turnaround and the impacts, I thought we had to talk about it again. Again, I think we need a little more clarity on the actual transition method. The next one, which many of you might be unfamiliar with, is MiCA. MiCA is markets in crypto assets. So the European Union, and this falls only in the European Union, they've been pushing this since about 2020, late 2020. And you can see here from the quote of the commissioner, as several people have said before me, the future is digital, and he couldn't agree more. And embracing it is a priority that we identified as a major source of potential growth. So I think the European Union really understands that in order for this to be an essential part of the growth, they need to make sure that there are certain regulations in place to protect people, protect the customers. So what MiCA goes into, it's about a 175-page article. It also refers back to other articles like European Securities and Markets Authorities. That's a 450-page article. No one wants to read these. It's not a fun read. So I'm trying to get the best summary consolidated in an article, which I could share later. But the purpose of this is just to make sure you're aware of what MiCA is and like when you're going to be required to, because anyone could get a European Union client and they're going to need to follow these requirements. And what we're doing at Cryptio too is trying to follow all this and figure out how we could best build reports or build in exactly what's needed to make it as easy on the customers as you working with the clients as possible. So what MiCA is really doing is just preventing market abuse, protecting market integrity, creating rules for issuance and trading of crypto, and just consumer protection around trading, exchange, custody. And they put this all out well before FTX. So they were kind of ahead of their time, but things just take time. They were expecting to vote on all these legislations by February 2023, so this month. Nothing's happened yet. It seems like it's been pushed back and back. from all the different articles I've read. Right now, they're targeting August 2024 as the date which this goes into regulation, and companies need to be compliant. So there's plenty of time. It's just that everything that's been put out there so far, it can change. So to go into this a little bit more, what they do is they just define the assets and scope. And what they don't mention is stable coins, how they separate out the three different assets in scope are e-money tokens or crypto that's meant to be used for payment. This is usually pegged 1-to-1 to a country's currency. They also have asset reference tokens, and these are crypto that is not e-money that aims to maintain a stable value by pegging to any other value. So multiple country currencies, and that'll exclude that'll exclude the algo-based stable coins. And then utility tokens, it's just a fungible crypto asset, and basically everything else that doesn't fall into e-money or asset reference tokens. And NFT and DeFi is excluded from this. Now, who's this going to impact? It's going to impact most companies, because I think they're, at least right now, they're keeping the language a little vague, but they consider crypto asset service providers, or CASP, CASP, and the issuance of offering crypto assets. A lot of this will go to banks, a lot of this will go to like hedge funds, but I mean, a lot of other companies will fall under this. I think we need a little more clarity on exactly who. They do provide a large list of what's excluded and who is excluded. I won't share that right now. Again, I could share the paper I'm writing up just to give you guys a summary to read up. But what they're doing is they're going into like, how do you protect selling and promoting of crypto? So people right now, they could create any crypto coin and push it out there, pump it. You have your pump and dump schemes. You have people that are, losing a lot of money from what they think is going to be the future. So what they're requiring in the European Union is white papers to be issued for any assets, any new assets. There are limitations. I mean, if you have less than 150 investors, doesn't exceed $1 million in euros over 12 months. If you issue mining rewards, they're all different criteria if you need a white paper or not. I think everyone understands it's probably best practice to have a white paper regardless. But like I said, people could be foolish, and ultimately in the end, the consumer usually suffers. But what they do is MiCA proposes like a bespoke framework to regulate like significant stablecoin issuers and force them to comply with stronger capital. So based on all the different requirements and the companies that fall into, a lot of what MiCA is a capital requirement for those in banks. It's like it reminds me of like capital requirements around collateral, which was a recent development in the US, but it's just to make sure that everything going on has a microscope under it. People understand that it's not the Wild West, and there are going to be rules governing all these different CASPs, or just to make sure everything is stable going forward. It's unfortunate things haven't happened a little bit faster, but I mean, these are regulations. I think in the US, we see things moving a little faster just because of maybe the pressure that they're getting. But it's great to see that, European Union is also really focused on just protecting everyone. The last topic I wanted to cover, and this is one I'm a bit close to, it's the SEC fines. Now, this isn't technically accounting. It does impact all of our companies. It impacts, potential staking that we need to track in the different companies that we're covering. But recently, Kraken was hit with a $30 million fine. And what, in my opinion, we see the SEC doing is like a Monday morning quarterback, where they let things happen, and then they say you can't do that anymore and issue a fine. Back when I worked at BlockFi, they got fined for their BIA account, $100 million, because they didn't issue it, or they didn't register it as a security. And to do that, you just have to file for an S1. You go through a very deep audit, and ultimately, if they agree with you that it should be filed as a security, they let you file it as a security. It gives them certain oversight into that. But, you know, in their mind, they're helping protect the customer. Now, Kraken paid that fine. So did BlockFi. In my opinion, what BlockFi was trying to do when they paid the fine is they thought that they would be first to market. They thought that they would have this interest-bearing account that no one else had, that no one else was supported by the SEC. So once they got that filed, they could be the only game in town. Instead of fighting them and going through the legal battle and extending this for, you know, a year, 2 years, we see Ripple. They have $150 million probably spent over the past few years just fighting the SEC on their fight as of being a security or not. They said, we'll pay the fine, we'll move on, we'll be friends with the SEC, and we'll reap the benefits as soon as we could file this as a security. But you see Coinbase, they're fighting back because, you know, maybe they're probably not right, you know, and you can't let the SEC just push people around and fine people. So they have pockets, they're a public company, they're fighting back, they're arguing that these are not securities, they're arguing that, you know, the crypto assets are they never leave the customer's pocket, you know, despite maybe the customer never actually having a wallet that they could actually control. So there's going to be more back and forth, but I thought this was an interesting one, especially with my experience at BlockFi and working with them and just seeing the inside strategy from these companies and why you maybe just comply with the SEC, because in the end, you know, they have deep pockets, they could go on forever, and they probably don't want to say we were wrong. So there are two interesting approaches that came from this, but, you know, not really accounting based, but I thought it was a really interesting topic. Just wanted to share my thoughts. And yeah, that covers the recent market events from my side.
Cool. Any questions for Jeff before we dive into some of the final stuff? So anything on the fair valuation, on the MiCA regulations, or, you know, even just thoughts on the staking debate?
And I'll definitely get back to all of you once they issue the paper in about 45 days, 50 days from now, and get everyone's thoughts on what the FASB has actually come out with, the concrete.
Cool. All right. Well, we'll move on then. Final few things. We're going to a bunch of events, so if you're going to be there, definitely let us know. Message us. We've got ETH Denver. Is anyone going to Denver? Jeff's going to be there. Drop him a line. QuickBooks Connect in London and Paris Blockchain Week, and there's going to be some pretty huge announcements from Cryptio side there. So if you're headed to Paris, or if you know someone from your team is headed to Paris and you want them to meet up with us, and we've got sort of an exclusive event as well. So if you know someone who's going to be in Paris and you want to get them a seat, drop us a line. We'll send them an invite. And then also DC Blockchain Summit later in the year. We'll be at Consensus in Austin, Mainnet in New York, and a couple of other places, also Miami for Bitcoin as well. So yeah, lots of events on the horizon. If you're there, drop us a line, LinkedIn, email, Telegram, wherever. So we've done that. Any questions for Jeff? A few more things. So you might have seen Cryptio's secured a partnership with Credo. Credo, if you're not familiar, they are a custodian or custody MPC provider, a decentralized MPC provider. They are the only DMPC provider for MetaMask institutional. So if you've got a large enterprise or fund that is closely working with MMI, MetaMask institutional, there are good chances that they're working with Credo, and we're partnering with them. So that's a pretty big one. We're also two more partnerships that have been signed this week, and then you will see being announced across everywhere, is going to be on the BitGo side. So we've also secured a pretty strong partnership with BitGo and a pretty strong partnership with CoinCover. CoinCover, if you're not familiar, they're on the disaster recovery side. So lots of partnerships, really sort of growing out the ecosystem. And And when I say partnerships, it's not just like, okay, put the logos together. In a few weeks, you'll see the integration in the product with Cryptio. And also there's more partnerships to come on the custodian side over the next few months. So yeah, really sort of broadening the scope there. And finally, the first thing is, you might have seen on LinkedIn, if you're not following Cryptio on LinkedIn or Twitter, please go and do that. There's the QR code here. If you scan that with your phone, you'll be able to join or subscribe to the newsletter on LinkedIn. And we've already got 750 subscribers to this newsletter, and it's been 1 week. So if you've not subscribed, definitely subscribe. It's really high quality content, a lot of positive feedback from there. So you'll see some good stuff there. And also as an accounting partner, you get access to the Telegram community, which is also here. If you don't have access, drop us a line and we'll send you a link. And that's kind of that. So maybe just before we jump off, few final points. Is there anything that you guys want to see for next session? Anyone who's got some thoughts now, feel free to jump in. But if not, you can obviously drop us a line in the Telegram. But any features on the product side that you want us to dive into, we can do that. But also anything sort of industry-wise that you've been sort of seeing and coming across, you're not quite sure how to deal with on the technical accounting side, or anything there. All right. Okay. I'm just going to take that to say that you're all super, super happy with all the content that we're showing. So that's great. And if you do enjoy the content, please let us know in the Telegram group or LinkedIn or whatever it is. I really appreciate that. And yeah, we're going to be doing some meetups at all these events. So if you're going, definitely let us know. All right. Cheers, everyone.
Awesome.
Thank you so much.
Thanks, everybody.
Thanks for joining.
Thank